When is Bitcoin gonna peak before its next big crash? I'm Brett at CryptoGX, and in this video, we'll hit 5 quick stops. We'll start with the 4-year bull run, a basically fast price rise, the halving that slashes Bitcoin supply, easy on-chain clues hiding the public blockchain, big picture liquidity, basically the money sloshing through markets, game-changing ETFs, stock-like funds that hold Bitcoin, and the emotions that push prices up or down. We'll also look at new regulations, basically surprise government moves, and wildcards that could speed up or slow down the run. By the end, you'll see why most signals say the 2025 surge likely cools off in late 2025 or early 2026. And you'll know simple signs to watch for so you're ready. Stick around, let's jump in. So let's lock in the first milestone on our journey, the 4-year rhythm that's backed into Bitcoin's code. A halving is a scheduled event that slices miner rewards in half. The latest one hit in April of 2024, dropping the reward from 6.2 Bitcoin to 3.125 Bitcoin per block mined. History shows that these supply cuts don't pump prices overnight, but big rallies have followed after a while of time. And usually this amount of time is roughly pretty similar in each different cycle. After the July 2016 halving, Bitcoin topped nearly $20,000 in December of 2017, which was about 17 months after the halving event. The May 2020 halving sparked a run from about 8.8 thousand to a new record of 69,000 by November of 2021. And again, it was inside about an 18-month window. But why does this matter for the 2025 Bitcoin bull run? Well, if the pattern repeats, the next window for a cycle peak stretches from mid-2025 to early 2016. Late in every cycle, profits often flow from Bitcoin into altcoins. Basically, these are all the non-Bitcoin coins. This sets off what's called an alt season, where smaller projects surge in price. Keep these timeframes in mind. They'll really frame every other clue. These are things like liquidity, ETFs, and market sentiment, which we'll cover next. So let's zoom into the blockchain itself, where the numbers really never lie. On-chain data means the facts that are stored in Bitcoin's public ledger that anybody can read. Different pieces of data on the actually things that are going on, different trends and factors within the blockchain. One big crowd favorite gauge is something called the Pi cycle top indicator. This compares a 111-day moving average, basically the average closing price over 111 days, within a longer 350-day average multiplied by 2. The math's not important, but if you understand it, that's what it is. As you can see here, this is the Pi cycle top indicator chart, and the blue line is the 111-day moving average, and the pink line is the 350-day moving average. And of course, the yellow line is the price. As you can see from this chart, when the pink line crosses above the blue line, past bull runs have ended within days. This crossover was on point when it comes to the 2014 bull run, as well as the 2017 bull run, cross right here, big downturn, and as well as the 2021 bull run. The pink line crossed below it right here, and then went back right above it. There was a little bit of kind of sideways movement, but then they separated again, pink being way above, and then boom, there goes the downturn in Bitcoin's price. Analysts that track this same exact data project that the Pi cross is going to happen on the 17th of September in 2025, which is a date that fits within our halving roadmap and timeline if history keeps repeating itself. Another flashing light is supply and loss. This is the percentage of coins that would sell for less than they cost. This metric just fell below 2%, which is one of the lowest readings ever recorded. As you can see from the kind of historical data, if the supply loss fell below that amount, then the top was in essentially, as it happened here in 2017 and 2021. So that's what we're looking for as well in 2025. As you can see here on Cointelegraph, they predict the same exact zone here. If the Bitcoin supply and loss drops below 2%, that's something to look out for. As you can see scrolling down the same page on Cointelegraph, at the same time, more than 98% of Bitcoin is sitting in profit, which is another rare late cycle condition. That means when most people are in profit, there is a chance that people are going to start taking those profits, selling, and then causing, the downturn of the Bitcoin market, basically starting the bear market. And finally, with on-chain data, another piece is that coins are very quietly leaving exchanges for cold wallets, cutting the ready to sell supply. You can see that here on another Cointelegraph article. If you scroll down, you can see the Bitcoin balance on exchanges has fallen to a 6-year low. This shrinking basically means that fewer coins are available to dump very fast when the sentiment flips. So fewer coins on exchanges plus extreme profit levels often set the stage for very sharp tops. Keep these three signals on your radar. When they converge, history says the finale is not very far away. These blockchain clues are very strong, but they float in a bigger ocean of cash or funds. This is something that traders like to call liquidity. It's money and credit that can move throughout the market. A study by Cross-Border Capital says that Bitcoin often trails big moves in the world M2. This is basically cash in checking accounts, saving accounts, and short-term deposits. And it seems to follow the M2 about 8 to 12 weeks behind. This is a nice look at the chart. As you can see in the 2021 timeline, there was a very sharp top right here, and that was very nearly the end of the 2021 bull run. We had a little bit of a resurgence here, that 8 to 12 week delay, and then it dropped off. So when it dropped off right here, that was probably a good point to sell. As you could see, it was a few weeks after. You would have noted the drop in the M2 and then sold right here, and then you would have been fine. You would have seen it come up, and the M2 did not come up. So at that point, I probably would have stayed out of the market knowing that it was going to turn down as well. I would not have tried to buy this dip because these kind of resurgences aren't common. As you can see in the previous bull run, it just kind of slowly dropped off. This one drastically dropped off. So you'll want to definitely keep an eye on this M2 chart as it relates to the Bitcoin price. Over at Cointelegraph, there's the same expectation that this wave will keep rising high until a very high point around mid-2026. It's a little bit longer than most expectations, but for now, that's, one expectation that is out there in the market and probably the longest term that you could expect. Another important aspect in the economy is that the US Federal Reserve just held its main rate at 4.25 to 4.5%. As you can see right here on this Reuters article in just the first summary line. They also hinted at possible cuts later in 2025. Lower rates basically means that there's cheaper loans out there and it could send more dollars and investments into crypto. This signals that we're potentially not quite over yet. On a more global scale, in China, banks issued a record 5.13 trillion yen in new loans this January as leaders are pushing growth. So aka more liquidity in the system, potentially more investment into crypto. You can see that here on this article from Reuters. They hit a record high on their stimulus. In Europe, the European Central Bank, or ECB, trimmed its deposit rate to 2.5% and signaled that it could ease again after a short pause. You can see that here on another Reuters article. Simple summary right here, dropped to 2.5%, although this was expected. Spot Bitcoin ETFs have already vacuumed up billions of dollars in demand, but that boom really depends on easy funding as well. Easy money is a rocket fuel, but it can run out. Liquidity watcher Michael Howell warns the current debt refinancing cycle, which is the force keeping cash flowing, will likely peak in mid-2026. This was that article on Cointelegraph that we were discussing before. At that point, the expectation is that this liquidity will start to dry up. When that tide turns, past charts show Bitcoin soon follows after. So keep an eye on rate moves and the global M2 line chart. They may mark the countdown to this cycle's finale. The river of easy money is flowing straight into brand new crypto pipes. The biggest pipe is the Spot Bitcoin ETF. This is a stock style fund that holds real Bitcoin so investors can buy it, but like a share in their typical stock portfolio account. So you don't have to go and get a crypto wallet in order to buy Bitcoin. Bitcoin's iShares Bitcoin ETF with the ticker IBIT already controls over $54 billion in coins and hauled in $643 million of fresh cash on April 23rd alone. This was its second best day ever. Those huge inflows really just tell us that big funds still want exposure, which supports prices late in a cycle. However, rules and regulations are changing very fast. In Washington, the Bipartisan Genius Act of 2025 aims to set clear guardrails for stablecoins. These are basically crypto tokens whose price is locked to the US dollar or other fiat currencies. Basically, one coin is $1 or one coin is €1. Lawmakers say that the bill could pass before Memorial Day, giving banks the green light to issue their own dollar-backed tokens. Now, across the Atlantic, Europe's MiCA, M-I-C-A, that framework starts enforcing strict licensing and reserve rules for exchanges and token issuers on the 5th of March 2025. So we're a little bit into that. These are clear rules that entice big players and help liquidity stay inside of the system instead of leaking out. Putting all this together, the massive ETF demand plus friendlier laws, that just means that today's market structure is much stronger than any past cycle. But it also means if flows slow or regulations tighten unexpectedly, then the sell-off could be much sharper. So we've got to keep an eye on these particular news bites. While the money and liquidity kind of rules the groundwork, the crowd mood really decides the way the price really flows at the end of the day. A quick way to gauge that mood is the Crypto Fear and Greed Index. This is a 0 to 100 meter that reads extreme fear at 0 and extreme greed at 100. It has recently spiked to to 73 in the greed side. This is jumping heavily from March and April lows of about 25, even down to 15. This essentially signals that traders are feeling very bold again. On-chain data backs, and as we discussed before, on-chain data is really backing that excitement. Now, the supply and loss that we talked about earlier, that was on-chain data. This essentially means the amount of Bitcoin holders that are holding it at a loss. As we mentioned before, CryptoQuant has noted that less than 2% of all Bitcoin is now in a loss, meaning 98% of holders are sitting on gains. Historically, this rare setup crops up late in bull runs, right before euphoria hits, which is an overheated state where everybody thinks that they're going to win. This turns into very sharp pullbacks, so we could potentially see one right now. Keep an eye on both gauges, the fear and greed racing towards the 80 mark and supply and loss staying near zero. Buyer optimism may be peaking and the cycle's clock could be ticking. These mood changes can still get big jolts in the price based on surprise events and big news announcements, essentially. In March, President Trump signed an order turning about 200,000 seized Bitcoins into a U.S. strategic Bitcoin reserve. This is the first major move within the U.S. economy of crypto. Now, the alternate side of this, where there's some uncertainty, is across the Pacific, Chinese courts are debating whether to keep the confiscated crypto that they have or whether to auction it off, which would put billions of dollars in Bitcoin under state control, but they haven't made a decision yet which one they're going to do. On Wall Street, there's also some more uncertainty currently. The SEC keeps delaying a decision on Grayscale's spot Solana ETF. And as we mentioned, an ETF is just an easier way for investors to buy into these cryptos without having to actually get into crypto by getting a crypto wallet and buying it directly. They can invest in the idea of Solana essentially, while a fund will hold the actual coins. These regulators are now facing a very hard October 2025 deadline to say yes or no to this. Any of these events, basically a national hoarding of coins or a huge new ETF approval or a surprise ban, could stretch the bull run or end it early, have massive effects. With all of these wildcards in play, the roadmap stays very convoluted and potentially long or potentially short. The on-chain analysis shows that only 2% of Bitcoin sits in a loss, which is a level that has flashed right before past tops. On a positive side of things, fresh cash seems to be flowing. Bitcoin's IBIT pulled in $643 million in April on the 23rd, which was its second biggest day ever. Another potential positive is that the macroeconomic watchers at Cross Border Capital still see the global money growth peaking around mid-2026, so the liquidity tide is rising, but it's kind of on a clock, a ticking clock. For anyone that's holding Bitcoin, the US is in as well. Now they locked away forfeited coins in a new strategic Bitcoin reserve. This is proof that governments are now part of the crypto economy. Putting all this together though, the data hints that the rally can run through late 2025, maybe early 2026, but the warning lights are already blinking. Track these signals, the supply and loss, the ETF inflows, and liquidity charts. This way you're ready for price movement to potentially slow, especially as we get towards that September 2025 timeline is when you're going to really want to be watching these particular markers. If you're ready to get started so you can have the best bull run possible, I put links in the description for Coinbase and Crypto.com where you'll get $50 in crypto just for signing up with those links. And if you want to get into meme coins, I also left a link to MoonShot where you can claim some free meme coins when you sign up. If you learned something new or just enjoyed the video, make sure to hit the like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.